Hello, everybody, and welcome to VRIC Media, your most trusted voice in metals and mining. My name is Jesse Day, and today's guest is the CEO of Heliostar Metals, a company aiming to grow to become a mid-tier gold producer. It's Charles Funk. Welcome to the show.
Yeah, thank you for having me.
Great to have you. I'm very excited to dive into both the gold market and Heliostar as well. I want to start by getting your thoughts on the current macro overview of the gold sector. What are the main factors currently driving the gold sector in your view, and how do you expect this bull market to unfold moving forward?
Yeah, wide-ranging question. I think clearly you're seeing a devaluation of the US dollar and a concerted effort to devalue that from the Trump administration. And so anything that's on the other side of that bet, any hard asset, and particularly gold, is strongly benefiting from that. So you've got a generational margin on a pure ounce basis. No gold company in history has been making $1,000 to $2,000 an ounce profit. It's an incredible part. It feels to me a lot like the 2004 to 2008 bull market in the early to mid innings of a market like that.
Well, the gold mining sector really appears to be waking up recently. You know, it was a big theme at this year's VRIC back in January that the miners aren't keeping up with the price of gold the way people expected them to. Normally, people see the miners as a levered play on gold. That performance wasn't happening. However, if we look year to date, the GDX and especially the GDXJ have both been outperforming gold by quite a wide margin, and obviously doing very well when we compare it to the broad market. Do you think the market is finally starting to realize the value there? And do you see this as potentially the start of a major bull market in the gold mining sector?
Yeah, I think you are starting to see that. I don't think it's the start, but I think it's fairly early in that cycle. If you're concerned about an S&P investment right now, you can pivot to a gold producer that's producing a tremendous free cash flow, as well as giving you the protection that we just talked about against a devaluing dollar or a recessionary environment that may or may not appear in the US. So I think the market's realized that it's a great straight up investment on face value. And it's also a great de-risking investment against your typical tech stock or any S&P supported stock. I think it's a trend that you'll see continue over the remainder of this year and next year. And I think it's very supportive for gold companies.
Well, let's pivot to discussing Heliostar Metals and how the company fits into the picture. Why don't you start by giving us an overview of the company?
Yeah, we're one of the sort of fastest growing new gold companies, as we touched on. We aim to be a mid-year producer. We've gone from zero production to 30 to 40,000 ounces this year. We've got a pathway to 150 to 200,000 ounces in the next couple of years. And if we achieve that, we'll be one of the fastest growing gold producers in the Western world.
And I want to read a statement you made in the Heliostar company presentation, which you've just alluded to. It said Heliostar aims to be a premier precious metals growth company, producing more than 500,000 ounces of gold per year by 2030. So walk us through your strategy for getting to those 500,000 ounces by 2030.
Yeah, it's been a long-stated goal of ours since we went public in 2020. That's what's probably separated us from a lot of companies, is that we chose to build a company that would be a producer. And we've made a number of steps. We've acquired a portfolio that's got over 6 million ounces of gold in it with 2 operating mines. As I said, we've organically got a pathway from the current 30 to 40, maybe to sort of 50 to 100 range with our existing producing assets. We plan to build a mine and bring that online called Paula in 2028, which we think will take us to 150 to 200. Then we'll build our Cerro de Gallo mine after that to 300. So organically, we think we've got a pathway to around 300,000 ounces. We think we can get there with very little to no equity dilution, which is a pretty unique business proposition. And then we would look to do M&A to grow to the final 200,000 ounces that we need to add in. We want to be an aggressive growth company, and I think our history and the decisions that we've taken have demonstrated that's our DNA.
Well, I want to hone in on your 100% owned projects in Mexico, the progress you've made at them, and plans for the future. Let's start with the 2 producing mines, La Colorada and San Augustine. Walk us through those 2 projects, where you're at the moment. What are the plans moving forward?
Well, first of all, the history is incredible. They're almost the deal of a lifetime. It's hard to believe, but a little over 12 months ago, we agreed to buy them for $5 million total. In this market, that looks an incredible investment. It was a very fortunate set of circumstances that allowed us to do that. They were mines that looked like they're at the end of their mine life, and because they were funding growth elsewhere, in the precursor company, Argonaut Gold, for those who know that company. And sadly, that company failed when the capex of a mine they were building in Canada got away from them. And so the Colorado has been an incredible turnaround story. It's gone from care and maintenance and residual leaching to we restarted production at the beginning of this year. We've got a 6.5-year mine life. We're going to put out a study that we think can further improve those economics. Simply an asset that had been undercapitalized, underinvested in, and the combination of a tight focus on it and a rising gold price has made a tremendous turnaround for that. San Augustine is a similar opportunity. It had been producing a small amount of gold, but it needed permits to expand that production. I'm very pleased to say that we've received those permits and permissions to do that, and we're going to restart production at San Augustine late this year. So 2 assets that on face value looked like they were at the end of their life or maybe even a liability. A combination of gold price, care and investment has fundamentally reinvigorated those. We paid back the capital to buy those assets in 4 months. We will make, 5 times that investment from San Augustine alone, let alone La Colorada and the other growth assets beyond that. It's been an incredible purchase with a huge runway in front of us in terms of free cash flow from those.
Well, let's talk about those 3 gold growth projects, San Antonio, Cerro del Gallo, and Ana Paula. Walk us through your plans there and how you plan to expand and grow gold production at each of those projects.
So the biggest of those is Ana Paula. So Ana Paula is the mine that we're planning to build next. We're currently completing a feasibility study on that, which we expect due mid next year. We expect to have that in production in 2028. It was considered to be an open pit. It was permitted for an open pit. And when we bought it a few years ago, we saw a spectacular high-grade core, 60 meters wide, averaging over 5 grams per tonne. There's a zone of that ore body averaging over 10 grams per tonne, nearly 200,000 ounces. We think it's going to drive relatively low capex, significant free cash flow. I think it can be eye-watering in the first few years. We think it's got the possibility to be around or sub $1,000 all-in sustaining costs. Ana Paula is a very high quality, we believe will be a very high margin gold deposit. It's open. It's got significant depth hits that haven't been drilled or haven't been followed up on. We've got 2 rigs drilling it at the moment. So we think that's that real step to quality for us as a company. If you look at companies doing 150 to 200,000 ounces of production at a below 1,500 AISC, they're 1.5, 2 billion plus companies. That implies a 5 times multiple for us. And the real power of our business proposition is that we think we can make a significant amount of cash flow over the next couple of years, combined with project financing, and maybe not need any or very little equity to build Ana Paula. If we pull that off, that's obviously tremendous for our share price, and it's what we're going to work very hard to achieve. So Ana Paula next, and then we'd like to build Cerro de Gallo behind that. We're getting no value for Cerro de Gallo at the moment. We're about to update a PFS on it in the second half of this year. So we've got some really big growth catalysts in the company to demonstrate that I think we're worth a lot more than the market truly appreciates. So maximize cash flow of our existing assets, build Ana Paula, and then build Cerro de Gallo is our plan for our development pipeline. And as you touched on, there's no M&A risk to execute on that. We own them all 100%.
Great. Well, Eric Sprott is a large shareholder in the company, owning 15% of shares outstanding. Has he revealed to you or given you any insight into what attracted him to the project and why he was willing to commit so much capital?
Yeah, I think at the risk of trying to put words in Eric's mouth, there's 2 things I like that I think Eric really likes in us. First of all is the assets, the size of them, their ability to grow, the spectacular nature of some of those ounces. And separately, it's that cash flow margin that's increasing. He's not sitting there owning a company that's going to dilute significantly. He's showing his company that's adding cash to the balance sheet. So Eric first came in a meaningful way when we bought Ana Paula in early 2023. It was a big swing for us. We raised more money than our market cap to buy it. He came in with the likes of Franklin Templeton, Adrian Day, some of our biggest shareholders. And the perverse benefit of raising money in really tough markets is you pay less for assets. It's harder to raise the money, but you get that capital from really strong shareholders. And we've fundamentally benefited as a company by having a really quality share register support us as we build this business.
Well, you've also got a very strong cash position, $27 million in cash, zero debt, looking to be in tremendous shape financially. How much runway does that $27 million give you? And how do you plan to raise more capital when needed in the future?
Yeah, the turnaround's been incredible. When we closed the transaction in November, we had a bit over $1 million in the bank and we borrowed $5 million to buy the assets. We paid that $5 million back in 4 months. We've grown, most of that cash flow has come from the operations. We aim to continue to grow our cash balance. And the idea, as we talked about, is we'll deploy that particularly on Ana Paula. We're doing the biggest drill programs these assets have seen for a long period of time. The biggest we'll be drilling more meters as a company this year on resource growth than we've ever done cumulatively in the entire history of the company. So strong deployment to grow resources, to grow production, and to bring Ana Paula online and keep that really healthy balance sheet. So we anticipate the next financing requirements we'd have is a project financing that we would do for Ana Paula. And we think that the other half of the capital required to build Ana Paula can come from our balance sheet, where we're in an incredibly strong position.
Absolutely. Well, could you shed any light on the team behind Heliostar, starting with yourself and your own background and how you came to become CEO of the company?
Yeah, so I'm really proud of the team that we've put together. My background is as a geologist who worked for big companies, companies that got acquired by BHP and then Newcrest that got acquired by Newmont. Had notable success as the VPX for Vizsla Silver. Very proud moment in my career, but always wanted to go out and build a producer. Just think that that's a sweet spot for protecting the downside and really having big upside to grow the business, looking at 100 to 200,000 ounce a year operating assets. So we brought in our COO, Greg Bush, who came from Placer Dome, was a COO of Capstone, built mines in Mexico, operated mines in the jurisdictions that we're working in. You don't want me building your mines, you want Greg building the mines, and that's exactly what he's doing. Sam Anderson, our VP Projects, ex-Newmont, he deserves all the credit for seeing the underground potential of Ana Paula and delivering on it. Our CFO, Vitalina Lysoon, joined from Gatos Silver. VP Corp Dev, ex-Placer Dome, wide industry consulting experience in Mike Jingles. We recently had Stephen Sook join us, who was an analyst at Stifel. We've got local Mexican experience with Hernan Dorado running our sustainability as VP of our sustainability. And Ramon Davila joined us as a board member last year. Ramon's a doyen of the mining industry in Mexico. He helped build First Majestic. He's worked for the permitting authorities. He's worked for government. He's one of the highest profile, most successful Canadian Mexican miners. So we've grown what we believe to be a really strong and capable team, and we're trying to deploy that and grow that reputation as Heliostar.
And when it comes to upcoming news flow and catalysts for the company that shareholders can look forward to, what are the main ones that come to mind for you?
Yeah, the news flow coming might be my favorite part. I kind of break it down to 3 levels. There's that consistency and performance, which is our quarterly production. So we'll put Q2 out in late August, and every quarter we'll be putting that out. So you can hold us to account for our judgment and our promises and our cash flow generation. Then on top of that, there's these big NAV growth steps showing that the business, in my opinion, can be worth a lot more. The first of those is we're expecting very shortly the La Colorada technical report update. We expect that likely to come in mid to late August. Then later this year, we'll have the La Colorada PFS. As I touched on earlier, next year, the feasibility study from Ana Paula. I think they're going to show significantly multiples above what we're worth today. I don't think the market truly appreciates the combined power of those 3 studies to come through. And then what I was jokingly referring to the other day is the sex appeal. We've got 2 rigs and 15,000 metres at Ana Paula. We're just about to start the largest program that St. Augustine's seen for a long period of time. We're just in the middle of the largest program that Colorado's seen for over 5 years. So a lot of resource growth and exploration drill holes. Our DNA is to grow resources, is to take technical decisions that others mightn't have seen or potentially overlooked and unlock those. So a huge amount of everything from drilling stockpiles at La Colorado to resource conversion and Paula to true exploration on all 3 of those projects. They're going to be some lovely, hopefully surprise press releases over that period, and all of them have a potential to meaningfully impact our share price.
Fantastic. Well, I'll end by opening the floor to you. Is there anything we haven't yet covered or anything you think that it's important to emphasize that you think potential shareholders of Heliostar should be aware of?
Yeah, I'm putting together a slide for an updated presentation. And it's looking at using La Colorado as a proxy for this margin growth that you're referring to at the top of the interview. We're making more money per ounce than the asset's ever done in its history. And I think that's reflective of the broader industry. It really shows the margin expansion that you're seeing. And so my takeaway from that is there's never been a better time in history to be a gold producer, or therefore to invest in a gold producer. The margins have never been higher on a dollar per ounce basis. And I think there's a sustained window where that's a sweet spot. And I think the extension of that is there's never been a better time to be a growing producer and adding, don't go, in my opinion, take that stagnant production. Look for a company that's adding production. And to reiterate my key business proposition, if we can grow to 150 to 200,000 ounces in 2028, which we fundamentally believe we can, we think we will trade at significant multiples above what we are today. And we believe we can do it without issuing any meaningful new shares.
Well, I'm going to put a link in the description below to the Heliostar Metals website, as well as social media for people who want to follow along with the company. Charles, this has been a great conversation. Thank you so much for coming on.
Yeah, thank you. And thank you for everyone for listening.